Assalamu alaikum wa rahmatullahi wa barakatuhu. This is our next slideshow for today, and in this slideshow we are going to learn trial balance and how adjusting entries are made, reversing and closing entries are made. These are very simple entries to be made and very necessary, simple but necessary entries to be made. So we go to our question, how this is done, and try to solve the question. This is our question given. Following balances are taken from the unadjusted trial balance of Rayan and Ayan brothers on 30th June. There are several balances given for cash, account receivable, all the accounts, the debit balances are given and the credit balances are given, and if you add up both of them, you shall be the same. The totals of debit balances and the total of the credit balance shall be the same. Now we go to the next slide. There is a data for adjustment. Prepaid insurance is 15,000, unpaid salaries rupees 15,000, depreciation expense is 30,000, unrecorded sales 50,000, and ending inventory is 30. Now we are supposed to prepare adjusting entries, closing and reversing entry. These are the three requirements, and we shall be doing the required entries in the next slides. So in this slide we are going to learn how adjusting entries are made, and insurance expense is debited and prepaid insurance is credited, and salaries expense is debited, and salaries payable which are accrued and still not paid are credited. Depreciation expense, as you know, is always debited, and allowance for depreciation is credited. And account receivable, this is the sale which was not recorded, 50,000. Account receivable is debited, and sales is credited. Here is this is the closing entry, and you would see that all the debit balances of the temporary accounts. Temporary accounts are those accounts which are prepared or established for a limited period. Like for example, all the income statement accounts are temporary accounts, and all the accounts are to be closed after 1 year or at the end of the period. So all the temporary account balances which have a debit balance shall be credited. Like for example, purchases has a debit balance and it is credited over here. Utilities expense, all the expense accounts are credited, so that the total of these credit is summarized and debited expense and revenue summary account. So total of these accounts is 965,000, and similarly all the accounts which have a credit balance are debited, and their total is credited in expense and revenue summary account. You'll observe that sales has a credit balance, but it is debited over here. Purchase, return, ending inventory have a debit balance, and the ending expense and revenue summary is closed into capital. We have a profit of 75,000. Expense and revenue summary is debited, and the amount 75,000 is credited to the capital account. Now to the next slide. This is a reversing entry for salaries payable, which is 15,000, and salaries payable is debited and salaries expense is credited. This is our last slide, and I request you to please subscribe and share it with your friends. And in addition to this, I would request you to practice it as much as you can. You must practice as much as you can. Allah Hafiz.